And good evening. This is the Elliott Wave update for the NASDAQ 100 for Wednesday, January the 26th, 2022. What an additional glorious day. It was a beautiful, beautiful trading day. And the volatility remains high and increased at certain points during the day. And it produced moves in both directions that were extremely profitable. What made it even stronger is having the ability to get that mindset in gear, in focus, so that anything coming around to worry about why is it bullish, why is it bearish, why are they buying or selling, what are they buying or selling, made no difference. It had no influence on the trades. It turned into just being able to trade technically on the technical indicators, on the Elliott wave count, on the expectations of where the market could move to. Now, putting that all together just produced an extremely profitable day. And it even was the type of day that if you broke your focus and you got into a trade that didn't go your way, you were able to take maybe 100, 200, maybe even a $300 hit. Clear your mind, get back into focus, and begin to trade again, because the volatility was high and strong enough that you just could get in another trade and make that money back real quick. And keeping your focus and keeping your eye on the moving averages and what the market really was doing and what it kind of was telling you and where it was going became more clear. It just was a profitable day. Now, I'm not saying that everyone is going to be able to do that on the switch of us, flicking a switch. It does take a little bit of concentration, of working to keep all of the noise out of your focus range so that you're able to focus clearly on the price action and on your indicators that are going to help you guide that trade that you're getting into. Now, let's go in and just look at what took place today. As I left it off yesterday, I had kept the minute 4 here as it was an ABC up. And we had gotten this yesterday, then it rallied, and then it just collapsed yet again. So in essence, I had to come in and basically say that I believed that the 4th was over and we're now coming down in a 5th wave, in a minute 5th wave, to complete this minor C wave. Now, Microsoft had reported their earnings yesterday. Earnings were not that bad, but somehow the market didn't like them, and the Microsoft sold off, and it closed at 288. And then in the aftermarket, it traded down to 272, maybe even 270. I don't actually remember, but they kind of brought it back to about 274 for the start of Globex. Globex kicked in, they opened, and the market just was bought. It closed down here at 13,890. I think the regular session closed at 13,922. And it opened at 13,945 and did not look back. They just bought it, and they took it all the way back up to 14,249, 250, 252, before it pulled back a little bit, and then it continued to rally. So what actually is all of this? I had talked about the possibility that possibly the 4th wave is not over yet. And maybe we could go all the way down to 13,706 and still rally up to 14,586, and it would still be a 4th wave. Well, didn't get all the way down to 13,706, but here's the deal. A, B, C, B. We get a 5-wave rally for C. The minute 4th wave ended there this afternoon after the Fed announced that interest rates would not be adjusted or cut or raised until March. Initially, there were algorithms that felt that that was the best thing you could say. And they rallied the market strongly. Now, mind you, the NASDAQ was up over, excuse me, 300. The Dow was up over, I believe, 300. And then suddenly it turned and it started to sell. And they did not stop. So the top was clear as a bell. When it started to break back down, it started to break below our support lines, right? Resistance on the way up, support back on the way back down, and then start to break below the moving averages. Now, it was a great move, but what the intensity of the drive lower, taking us all the way back down to 13,981. So it went to that first strong support zone for the move very quickly. I was like, wow, okay. Then it bounced. And it just keeps it very, very interesting, actually, because the volatility is so strong. Now, what, how, and what am I going to label what we're doing? First thing I'm going to do is I am going to, I think, is that still this? Yes, it's still in. So I have actually run the Fibonacci extensions, and they're still up there for the move lower. Okay, so again, nothing has actually changed. Come back in terms of fifth wave. We just had to go up and finish the 4 first. We had to reach above that resistance, and that was 0.382 resistance at 14,586. We got up to 639 and then just collapsed. So that's still in motion. So now that we've reached 13,981, I would expect an additional break back below. Excuse me. And then for the market to come down and break below 13,706, we've got a zone right there. We got 13,645 down here on the downside. Then we have 50% at 13,374, the first zone that can complete the fifth wave, where wave 5 would be equal to 618.618 times the length of wave 3 at 13,102. So that, I think, almost as a minimum is where I'm going to be expecting this. But for sure, wave 5 should take out the low at 13,706 before it is complete. At best, I might be able to say that this was wave 1 of 5, and now we're in wave 2 of 5. We had Tesla's earnings today, and the stock closed at 937, and they dropped it down to 888, and now they've already got it back at 935. So, you know, Tesla's going to be volatile. Tesla adds a lot to the market, adds a lot to the NASDAQ, and also to the S&P. So we see that they're going to bounce it all around. So again, it's going to depend on the rest of the interpretation and what exactly does the market do tomorrow. But Tesla can keep things higher. Now, do I have an upside scenario? At this stage, it would all be corrective. So I'm going to continue to use 14,250 as resistance now. That's where the 4 is. The 8 is above, just below the 50. Let me see if I can blow this up a little bit. Actually, I'm going to bring it down to the 30-minute chart. And then we'll take a look inside all of this to see, yeah, much clearer. Okay, so you can see now on the 30-minute, we still can use them. We have the 4 moving average at 14,184. Then we have that resistance at 14,250. The 8 is at 14,278. The 50 is above at 315, and the 20 is just above all that at 325. So if it's coming back up and it starts to break these and breaks those two, get out of the way. It's going to rally, and it should rally strongly. What it is, don't know yet, but the market will tell me. I'm just giving you, if it's an upside scenario and it starts to break this, it will pick up steam to push. Now, I don't believe that the balance of the market is going to support Tesla. So we may see a continued slide lower from the marketplace. We do have, I believe, a couple of additional reports coming out tomorrow from the Titans. Let me just see if this is going to be one. Amazon reports on the 3rd of February. I knew there was somebody that's coming out tomorrow. That's the first. Facebook? Is it you? Nope. Not sure. But in any case, there are additional earnings reports. But I think that the bloom is off the rose, so to speak, and that we should continue lower. Now, the downside, again, we're talking 13,981. I would suspect that the market should be able to break that pretty easily if downside gets going. And then the next target is down in here, 706, 13,682. Eventually, I'm looking for all of that to be broken and for it to head down to that 618 level, which is all the way down to 13,102. So we're really looking at an additional 1,000 points. And when the market can drop 500, 600 in a day, in a session, these are not out of the ballpark numbers. They actually fit the move. They actually fit what's going on. Now, remember one last thing. If my count is correct in terms that this is, we're dropping in a minor C wave to complete intermediate wave 4. What the expectations are for when wave 5 and that's intermediate wave 4 are complete is for a strong rally to take over and to just go. And it will be in the form of an intermediate 5th wave up. That's what I'm basing everything on right now. That's what I'm looking for. So yes, we still have some downside because this negativity has not left the market yet. They tried now once, twice to 2 different days to buy this market up on the hope of women in prayer that the Fed was going to do some type of a rescue. That's now been put off. So the selling picked up again. And so there was other news that the Fed also was talking about their repurchasing and buying back this low interest rate debt. And that I think is, and they're going to expedite it. That is what really started to kick in the selling. Again, as a trader, you don't care, but that's kind of what was underfoot. If that energy continues overnight and into tomorrow, I don't think we'll have a problem getting ourselves down below this level and into areas that should complete this minute wave 5, the minor wave C, and the intermediate wave 4. So I'm going to leave it there. Continue to trade smart, continue to trade using moving averages, continue to trade the Fibonacci support and resistance, continue to adhere to what happens when the market starts to break moving averages in either direction. If it breaks it, it's going to go. If it's breaking it on the way down, it's going to go. You will get that additional acceleration going. We did here, there's just a gap because the quotes were unable to get pushed through. But it's going to happen. And you can see it was 30 minutes of trading. And so that, that acceleration continued. So continue to use it, continue to trust it. And the next update will be on Thursday, the 27th.